A year ago this time, interest rates were around 3%. Now they are probably around 6.6, 6.7% at the time of this recording, and they have been as high as around 7 to 7.5%. So, are there specific factors that go into where my interest rate is? Now, that being said, there's still going to be a common interest rate that's out there, but depending on certain factors, your interest rate could be higher or lower. What are some of those factors? I'm Coach Sean, the realtor. First and foremost, this information is helping you. Please like and subscribe and follow for more real estate tips. Number one is your credit score. Lenders look at your credit score to determine what your interest rate is. If your credit score is higher, then you're going to get a lower interest rate. But if your credit score is lower, you'll get a higher interest rate because you're considered to be more of a risk. Number two, your down payment. The amount that you put down on the home can have an effect on how much your interest rate is. And so the higher you put down, the less your interest rate is, because again, that protects the lender when they're lending you this money from a certain amount of risk that they're incurring in giving you this money. So the third one is actually your loan term. There are varying durations of how long your loan can be, from a 30-year to a 20-year to a 15-year. But the higher your loan actually term is, the higher your interest rate is going to be. So if you're at a 30-year, it's going to be higher than if it was at a 20-year or a 15-year. Now, for a 20-year or 15-year, your monthly payment will be higher, but your interest rate will be lower, and you can pay that home off a little bit earlier. Number four, your interest rate type. Your interest rate type. And so there are a couple of them. There's a fixed and there is an adjustable. Fixed means it stays the same. Adjustable typically deals with wherever the market is, and when that pretends to change, it can either go up or down depending on what is happening with the market. And so with an adjustable, you'll start out maybe with a lower rate, but it's going to go up, particularly at some point in time. With a fixed, you know it's staying the same. And so adjustable rates oftentimes can give you more of a risk of going up. Number five, and the last one, your loan type. When I'm speaking of your loan type, it speaks of there are different types of loans. There's an FHA, there's a conventional, there's a USDA. There's also a VA for veterans. And so that information is out there. And so rates can be significantly different depending on which loan type you choose. My advice is for you to begin to contact a lender to get those options. If you need information on a lender that you can speak to that can help you navigate these processes, I am more than available to begin to give you some of that information to help you move forward. Again, thank you for watching this video. Please like and subscribe. I hope everything has helped you in your process of buying a home. And as always, God bless.